All right, let's dive in. Today we're tackling cryptocurrency. Specifically, we're looking at it from an investor's standpoint.
Sounds good.
You've given us a bunch of sources, including some stuff from Investopedia, like that investing in cryptocurrency article.
Yeah, I saw that.
But, we're not just going to regurgitate the basics here. We're
Well,
going deeper, pulling out those nuggets that'll really help you, the listener. Makes sense.
absolutely. And what strikes me is just how much you've gathered. This isn't just like dipping your toes in the water.
No
You're
way.
ready to really swim in the crypto ocean.
That's the goal. But before we get all philosophical, let's nail down what cryptocurrency actually is. Like, I'm seeing this Investopedia definition.
Okay.
It says digital currency not backed by real assets,
Mm-hmm.
traded directly between parties, and tracked on these digital ledgers.
So the takeaway here is that it's not like your typical dollar or euro.
Right, exactly.
Crypto is not tied to a government or gold or anything like that. It's decentralized. No middleman.
Ooh, I like the sound of that.
Potentially lower fees. More power to the individual. But of course, there are risks too.
We'll get to those. But first, this whole decentralized system, it's not like some lawless Wild West, is it?
No, there's a system. It's all built on blockchain technology.
Okay, that's one of those buzzwords I hear all the time.
Yeah, well, picture it like a public Google Doc.
Huh.
Everyone can see it, verify it, but no single person controls it. That's the beauty of blockchain. Transparent, tamper-proof.
Gotcha. So blockchain is like the foundation the whole crypto world sits on.
Exactly.
But let's talk Bitcoin. That's the ERG, right? Why is it so special?
It comes down to scarcity. Unlike, say, dollars that can be printed endlessly, Bitcoin's got a limited supply.
Like a fixed amount.
21 million, to be precise. That, plus the whole decentralization thing,
Yeah.
has led some to see it as like digital gold.
So like a modern day gold rush, but with a set amount of gold to be found.
You could say that.
Now, there are other cryptocurrencies out there besides Bitcoin, right?
Oh, tons.
Ethereum keeps popping up. What's the deal with that one?
Okay, so if Bitcoin's like digital gold, Ethereum is more like the internet itself.
Whoa, that's a big claim.
It's a platform for building all kinds of stuff, not just a store of value. Games, financial tools, you name it. Its currency is Ether, and it's currently #2 in market value.
So if I want to get involved in all this, how do I actually invest?
There are a few ways. The most straightforward is through a cryptocurrency exchange.
Like Coinbase, I've heard that name.
Exactly. They're basically the stock markets of the crypto world.
Okay, so I'd create an account, buy some Bitcoin, some Ether.
But remember, it's not quite the same as trading stocks. Crypto markets are way more volatile.
Meaning,
Prices swing wildly. You can make a killing one day, lose a ton the next. Gotta have a strong stomach.
yeah, I'm getting that. So exchanges are one option. What else? What about those Bitcoin futures I keep hearing about?
Those are a bit more complex. We'll dive into those later.
That's good.
The main thing to remember is figure out your goals, your risk tolerance, before diving into ANY method.
Good advice. But before we get ahead of ourselves, let's define some terms. I'm hearing all this jargon. ETFs, mining. What does it all mean?
Absolutely. Let's start with ETFs. Exchange Traded Fund. Think of it like a basket of different cryptos you can buy and sell as one unit.
So instead of putting all my eggs in one basket, like just Bitcoin.
You diversify.
Smart. But then I wouldn't actually own the Bitcoin, would I?
That's right. You own shares of a fund that holds it. So you trade off some control for convenience and diversification.
Makes sense. Now, what about mining? It sounds so old-timey.
It's not about pickaxes and shovels, but it is resource intensive. Basically, it's how new transactions are verified and added to the blockchain.
Okay.
People use powerful computers to solve complex math problems. The winners get rewarded with Bitcoin.
So it's like a giant digital puzzle competition.
Kinda. But the downside is it eats up a ton of energy.
That's what I've heard. Not very eco-friendly.
Exactly. It's a valid concern when you're considering Bitcoin.
For sure. Anything else I should know, jargon-wise?
Well, we keep talking about Bitcoin, but there's a whole universe of altcoins.
Altcoin?
Basically, any cryptocurrency that's not Bitcoin. Ethereum's an example. There are thousands, each with its own thing going on.
Wow, so many options. Must be overwhelming for a newbie.
It can be.
Yeah.
That's why research is key. You got to understand that tech, the purpose behind each coin.
Because not all crypto is created equal.
Exactly. Some are established, some are. Well, let's just say proceed with caution.
Duly noted.
Oh, and there's one more term we should cover. ICOs.
ICOs. What are those?
Stands for Initial Coin Offering. Think of it like a crypto version of an IPO, but way less regulated.
Okay.
It's how new crypto projects raise money. They sell these tokens that represent ownership in their projects.
So, like, I could be an early investor.
You could,
Mm-hmm.
but it's high risk, high rewards, but high risk. Lots of scams out there.
So, buyer beware.
Always. Especially in crypto.
All right, we've covered a lot here. The basics of cryptocurrency, the big players like Bitcoin and Ethereum and all these terms, ETFs, mining, ICOs.
It's a lot to process, but it's just the beginning.
And it's fascinating.
Exactly. So in the next part, we'll dig into how to actually put your money to work in this crazy world of crypto investing. Ready to continue?
Lead the way.
All right, let's do it.
Back again for more crypto talk. I'm ready to level up my knowledge.
Excellent. Last time, we kind of set the stage right. Explained what cryptocurrency is, who the major players are, Bitcoin, Ethereum,
Hmm?
and all that essential vocab for investors.
We did. And we touched on those risks too, like how mining Bitcoin uses so much energy.
Right. And those ICOs, those can be a bit of a wild ride.
Totally. But now, let's get practical. How do I actually invest? We talked about those cryptocurrency exchanges briefly, but I want to know more.
Sure. So these exchanges, they're online platforms, kind of like the stock market, but for crypto. You can buy, sell, trade all sorts of different coins.
So I'd make an account on one of these exchanges if I wanted to buy, say, Bitcoin or Ethereum.
Exactly. There are a bunch out there. Coinbase, Kraken, Binance. They each have their own perks, fees, security stuff. Got to do your homework and pick one that suits you.
What should I be looking for when I'm comparing these exchanges?
Security's got to be your top priority. You want an exchange with a good track record, strong security measures. Look for things like two-factor authentication, cold storage wallets, even insurance in case of, hacks.
Makes sense. Got to protect those digital assets. What about fees? Are they generally higher or lower than, like, regular brokerage fees?
It really depends on the exchange. Some charge a flat fee per transaction. Some do a percentage of the trade. And don't forget about those deposit and withdrawal fees.
Right, got to factor in all those costs. Oh, and what about the user interface? Are these exchanges easy to navigate?
Some are definitely more user-friendly than others. If you're just starting out, look for one with a clean, simple interface. Some even have tutorials and stuff, which is great for beginners.
That's super helpful. Now, last time you mentioned apps like Cash App as a way to buy crypto. How are those different from the exchanges?
So those apps, Cash App, Venmo, even PayPal now,
Yeah.
they've kind of jumped on the crypto bandwagon, let you buy and sell right within their apps.
Convenient.
Totally. Super convenient if you're already using those apps for other stuff. The downside is they usually offer a smaller selection of coins.
So if I'm looking for something more niche, I might need to go with a dedicated exchange.
Probably. Now, there's another option we should talk about. Traditional brokers. Believe it or not, some of the big names like Fidelity and Charles Schwab, they're offering crypto investments now.
Really? I thought they were hesitant to touch crypto.
They were at first, but they're realizing, hey, people want this. Some let you trade directly, others partner with exchanges to give their clients access.
So if someone's already comfortable with their brokerage account, they might not need to open a whole new account somewhere else.
Exactly. Keeps things nice and simple. All right, now let's tackle something a bit more complicated. Bitcoin futures. We mentioned them briefly last time, but they can be a bit confusing.
Yeah, they sound kind of intimidating.
They are financial derivatives. Basically, you're betting on the future price of Bitcoin, agreeing to buy or sell at a certain price on a certain date.
So if I think Bitcoin's going to skyrocket, I could buy a futures contract.
Right. But if it plummets, well,
I lose big.
yep. And there's leverage involved, which can magnify your gains into your losses.
Leverage. Explain that like I'm 5.
Okay, imagine you have $1,000 to invest. But with leverage, you could control a position worth, say, $10,000, 10 times your initial investment.
So bigger potential gains, but also...
Bigger potential losses. That's why futures are really not for the faint of heart or for beginners. You got to really know what you're doing.
Noted. Okay, moving on then. What about those Bitcoin trusts and ETFs? They sound a bit more like traditional investments.
They are. A Bitcoin trust, like the Grayscale Bitcoin Trust, it holds a ton of Bitcoin. And they issue shares that represent ownership. You can buy and sell these shares on the regular stock market.
So I could get exposure to Bitcoin without actually owning the coins themselves.
Exactly. And Bitcoin ETFs, they're similar. They track the price of Bitcoin, but are traded like regular stocks.
So they're more liquid, easier to trade.
Exactly. The trade-off is you're not directly holding the Bitcoin. You're trusting a fund manager to handle it all.
Right, so there's that element of trust involved.
Always. Now, we've covered a lot of ground here. Exchanges, apps, brokers, futures, trusts, ETFs. It's a lot.
My head's spinning a bit,
Yeah.
but it's good info.
The main thing is to figure out what works best for you, your situation, your risk tolerance, your goals. There's no one right way to invest in crypto.
Okay, makes sense. But now I'm curious, can I actually use this stuff for like everyday transactions? Is that a thing?
It's definitely growing. Some businesses, online and even brick-and-mortar stores, are starting to accept Bitcoin and other cryptocurrencies.
So I could like walk into a coffee shop and pay with Bitcoin.
Maybe. It's not super common yet. Still some hurdles. The volatility is a big one.
Right, if the price is fluctuating wildly.
Not ideal for buying a latte. And transactions can be kind of slow.
Slower than using my credit card?
Usually, yeah.
Yeah,
Depends on the coin, how congested the network is. But yeah, still some kinks to work out before it's truly mainstream.
makes sense. But it's exciting to see it happening, you know?
Absolutely. There's a lot of innovation going on. Stuff like Layer 2 solutions that are designed to speed things up and reduce fees.
Layer 2. What's that?
Think of it like building a faster lane on a highway. They handle transactions off-chain, outside the main blockchain. Helps with speed and cost.
Heart.
Definitely. And they're becoming more important as more people use crypto and demand those faster, cheaper transactions.
It's pretty amazing to see how much is happening in this space. So much potential.
Absolutely. And in the final part, we're going to explore that potential even further. We'll look at the future of cryptocurrency, the trends, the regulations, everything that might shape this industry in the years to come. You with me?
Let's do it. I'm ready for the grand finale. All right, we're back. Final part of our cryptocurrency deep dive. We've covered the basics, the players, the how-to of investing. Now let's look ahead. What's the future hold for crypto?
The million-dollar question. Right. It's a fascinating time to be watching this space. We talked before about those spot Bitcoin and Ether ETFs gaining traction.
Yeah, those seem like a pretty big deal.
They could be, especially for those institutional investors who've been kind of hesitant about crypto.
Right, they're used to the traditional markets.
Exactly. An ETF, that's familiar territory, regulated, relatively stable, could open the floodgates for a whole new wave of investment.
So it's like bridging the gap between the old financial world and this new crypto world.
You could see it that way. But let's not forget about all the innovation happening within the crypto space itself. We touched on DeFi last time, decentralized finance.
Yeah, that one's still kind of fuzzy for me. Can you unpack it a bit more?
Sure. The basic idea is DeFi wants to create a financial system that's open to everyone. No need for those traditional middlemen like banks.
Wow. So I could like lend money, borrow money, earn interest, all without a bank.
That's the vision. And it's not just a pipe dream. There are billions of dollars already locked in these DeFi protocols. The space is growing like crazy.
So it's actually happening, but is it safe? I mean, no banks involved. Sounds kind of risky.
It definitely has its risks. And then there's the whole regulatory landscape. Governments are still figuring out how to deal with all this.
Yeah, that's a big one. Some countries seem pretty open to crypto, others are cracking down.
Exactly. It's
Yeah.
a mixed bag. And it'll have a huge impact on how crypto evolves. Ideally, we need regulations that strike a balance. Protect consumers, but don't stifle innovation.
Right, gotta find that sweet spot. So we've got ETFs, DeFi, regulations, anything else on the horizon that could shake things up?
Oh, definitely. Central bank digital currencies, or CBDCs, are a big one.
CBDCs? I'm not familiar with that term.
Basically, it's a digital version of a country's currency,
Right.
issued by the central bank.
So it's like digital cash, but backed by the government.
You got it. Lots of countries are exploring this. Could potentially offer faster payments, cheaper payments, maybe even help those who don't have access to traditional banks.
Sounds interesting, but wouldn't that give governments even more control over our finances?
That's a valid concern. Privacy is a big issue with CBDCs. It's something that needs careful consideration as they develop.
For sure. It'll be interesting to see how CBDCs and cryptocurrencies like Bitcoin and Ethereum all coexist, or maybe even compete.
Definitely. And then there's another wild card out there. Quantum computing.
Quantum computing, now we're talking sci-fi.
It's getting less sci-fi every day. And it has implications for crypto. Quantum computers, they're so powerful they could potentially break the encryption that protects cryptocurrencies.
So all those secure wallets, those transactions, not so secure anymore.
It's a possibility down the line. Not an immediate threat, but something the crypto world is taking seriously. They're working on quantum-resistant cryptography. It's a constant arms race.
That's mind-blowing. Makes you realize just how much is still unknown, how much could change.
Absolutely. Cryptocurrency, it's more than just digital money. It's a technological revolution, a social movement, Who knows what the future holds?
It's exciting and a little bit scary all at the same time.
Exactly. That's what makes it so fascinating.
So for everyone listening, here's our final thought. What aspect of cryptocurrency intrigues you the most? Where do you see this all heading? Is it DeFi, the environmental impact, CBDCs, whatever it is, keep exploring, keep learning.
The future of crypto is being shaped right now. And your understanding, your participation, it all matters.
Well said. Thanks for joining us on the deep dive, everyone.